Hey, big warm welcome up to everybody. Good morning, good afternoon, good evening. Welcome back. Welcome back. 11:55 Eastern Time. Just about to finish up our morning here on Thursday, March 29th. Boy, almost done with this month of March, guys. Last time we saw everybody, it was a Wednesday, and it was a Wednesday we couldn't wait to get over. Yesterday was a very challenging day. Wednesday was a very challenging day. Dollar personality was lagging. Everything was sloppy. And I, of course, as you guys saw yesterday, I didn't help myself out very much by using the clues we got. So if you recall where we were yesterday about this time of the day, we were talking about how can we learn from our experience yesterday. And this morning we came back in, that was fresh in our minds of how we wanted to learn from the things we experienced yesterday. Can you remind me what we talked about yesterday? We talked about watching the dollar correlation. We talked about knowing where you want to buy and where you want to sell. We talked about trading your plan, following your plan. And this morning we came in today and we got right back at it. Had a great day here in the room. A great day for many reasons. One reason was we got right back on the horse. We got right back to making money today. And we learned from the lessons from yesterday. Now, I'll admit I maybe didn't learn all the lessons. You guys will see that in a second. Had a good day, though, because we build that confidence back up. Today was a day where we got the confidence back. And whenever we can get that confidence back like this, that's when we really know, that's right, there's something to this method. Like we always say, if you can just follow your plan, you're going to be just fine. That's exactly what we've done today. Now, before we talk about the trades we took today, guys and gals, I do want to remind everybody here this morning real quickly here, there is risk out there in these markets. Please be careful with your risk capital. Please speak to somebody you trust regarding your risk capital. I'm looking forward to training all my members today in members training. We're going to talk about, for today, advanced price structures. But one of the things you're going to notice is that when you become a member, you're going to be given a custom trade plan. You'll be given all the tools. You'll be given all the specific entry, exit, trade management rules, how to manage your emotions, how to manage your trades, how to manage your trade account, right? How to manage your diet, how to manage your sleep, how to manage your computer. Okay, we teach you guys so much about how to be an efficient professional day trader. I'm looking forward to giving you guys all that information as a member. So right now, all the guests out there, please be careful. Members, you be careful too. There's definitely risk out there in these markets, and this time of the year is always going to be, like I always say, at the end of the first quarter, it's always going to be a little bit more difficult than normal. Alrighty, get out of the first week of April. By the end of next week, we'll be right back on track again. We'll get all this first quarter jitters out of the way. We'll be on to the second quarter, and we'll be laughing about what we went through for about a week and a half. Okay, it always happens that way. Just when you think, right, you can't take any more of this junk price action during the end of March, it goes right to April 1st, and what bad price action. So, this morning, 3 clues. What do we use for clues today? Well, one of the clues we used this morning was the news. We opened the news. We knew we should get some news. Well, we should get some volatility. We should get some opportunities this morning at 8:30. So we knew right away to be on the lookout early. We also knew that at 9 o'clock, crude would give us a chance to trade back to the open. We took that trade today. It's called the crude open trade. You can find that right in the advanced course. We knew we had a minor news report at 10:30 for natural gas. And then you can see, of course, Ben Bernanke at 12:45, which we didn't think would be a big deal. He's not supposed to be talking about much important stuff here at 12:45 today. Okay, so the big thing was this morning, we knew we had the news at 8:30. Now, GDP, we talked about this earlier, GDP is one of those news events that since everybody understands gross domestic product, because GDP is on the minds of both major money managers and scalpers, right, retail traders, everyone's watching GDP. And what happens is, since so many people are watching GDP, that phenomenon in the markets that we talk about where price ends up moving in the direction where people think it will if the GDP came out as expected. So all the analysts all week are digging into the GDP report due out Thursday morning at 8:30. They see what the analysts' expectations are, and it's a phenomenon where now subconsciously they begin to take trades, put on positions that end up this kind of self-fulfilling prophecy where it manifests so price is already included in it. So by the time we get to Thursday, the market has already, quote unquote, priced in the news. That's the term what it means, priced in.